Good day, everybody. All right, let me get a link shared out. Big moment here for the markets. Link here, starting now. All right, welcome everyone. Okay, bit of a dump into the New York Open. I took a loss on a long, but I actually did short these highs. Then threw it into a long at these local lows. I still think the play here is actually probably going to be to get long. We testing horizontal levels here, previous highs, previous wick low. There's a GP of the move here. There's kind of two scenarios that I think play out this week. One being we just get the sharp retracements and we just get strong continuation, and oh my god, it's so bullish. And the other bullish scenario is just we play a range, and all of this is still on the table. Come take Sunday's low and retrace that whole move, and maybe even have a prolonged range throughout the week. And I think that could be applied to pretty much every altcoin. I tried a long at these local lows on ETH and Bitcoin. Looked okay there for a second into this local GP, coming and retesting the lows, just trying a local long setup here. That was kind of the plan from earlier today. Just show that the setups I took a loss on here. So on Bitcoin, I thought maybe it looked good to come into these lows on ETH into the New York Open, reject from these local highs into these, take these lows into the open, be kind of the most aggressive setup. And we got the rejection, but didn't quite get the bounce. I think this looks good for still reverting though. I think the play is probably going to be long. Similar idea. I mean, I kind of had a similar idea on everything. I'll just show here. XRP coming down to some local lows as well, which is just noticing XRP, same thing, just noticing in the Discord. This is a setup from the weekend. But yeah, come take these local lows, come take the local lows into New York. Same thing, same kind of structure on Doge. I think some of this might still be in play. Doge is kind of tapping a trend line right now. I have educational videos on order flow. There's in the members Discord. Yeah, we were kind of talking. I mean, talking in the Discord yesterday, somebody was saying, you know, what to do now. Everything's pumping. I mean, this is probably long anything territory. Use risk management and play towards continuation, and and I'll be open-minded to the ranging scenario. But yeah, the idea that, like, you know, if price goes straight up on a Sunday, the odds that it's not going to retrace some meaningful portion of the move into Monday is pretty low. It's possible, but it's typically not going to be the case. Just want to keep an eye on things here. Order flow as well. I think the play is probably to be willing to long any strength. Some big longs firing off now, though, wouldn't be so bad to run these lows one more time, test them one more time. Some bearish divergences forming an order flow. Got a little bit of bearishness here as longs are firing into this. Maybe run them out one more time. Take these lows. That could be a local setup. Break it down. Probably don't want to be long. Big volume here on BTC USDT Binance. 70 million, 65 million closing here. These are 1 minute candles. Same thing though, maybe a little bit of local bearishness. There's no way to know what's going to happen. Right now we're going to be running a lot of the liquidity that built up on this pump. Go out to the daily chart. I mean, this is kind of this is a reclaim of the range. You could look at it this way. Holding this up. Looks really clean in the low time frames. Suppose if we just come run these lows. But there's possibility of continuation out of this range. But you need to be pretty open-minded to it's just developing into a range. Over the rest of the week. Nice little local GP rejection here though. Establish some local highs, take the highs. Obviously not a lot of structure here, just have some internal lows. The origin of this pump. The major GP for the move. Not hard to imagine that there'd be a lot of liquidity down here. Just come and retrace the entire pump. Probably going to be a very reactive level. Do I have a high time frame directional bias? Yeah, I'm bullish high time frame. I mean, pretty much all of my analysis for the whether seeing lower or not is high time frame towards all-time highs, not high time frame towards a bear market. You know, I've talked about it a couple times on Livestream. I'm a little disappointed that I think probably Doge is, I'd like to see it added to the digital crypto reserve. Trump's kind of, he did the Sol ADA XRP thing, and then he said, and ETH and Bitcoin and other valuable cryptocurrencies are going to be a core part of the crypto reserve. I think there's probably a good chance Doge gets added, but maybe not. But I'm not so surprised to see XRP, even ADA. ADA, absolutely insane pump here. This is the 15-minute chart, 80% straight up. But I don't think it's worth fading high time frame, personally, the crypto reserve. Like, I know there's a little bit of like low time frames. It's like, oh, the crypto reserve pump's getting retraced, or, you know, this event is getting retraced. But high time frame, is that going to be a bearish driver for price or a bullish driver for price, having some kind of commitment from the US government to acquire at some kind of interval Bitcoin, ETH, XRP, ADA, and potentially other coins, probably a bullish driver for price, because you're going to have a lot of people speculating on that as well, and you basically have like guaranteed a bullish driving force in the price. I don't think it's especially if the details are like some considerable amount of these coins. There's really bullish counts on these coins too. It seems kind of silly in my view to have a high time frame bearish perspective on those particular coins. But something that could be thought about is how is that, like, you can imagine a scenario right now, the whole crypto market is sort of spread out. Their attention is spread over so many different narratives and projects, and it's like the meme coin narrative or phase was kind of a good example of that. What happens if there is a little bit more concentration, right? I think we could see scenarios where some of these coins depart because you start having a lot of speculation on the coins that are going to be included in that crypto reserve. And although there's a chance it could be more than 5 coins, maybe it's 10, maybe it's 15, I think that kind of concentration could bleed out a lot of the other narratives and market. And I just have I said this the other day in the Discord, is everything's kind of a meme in crypto. It's like, and some people will have the perspective like, oh, Trump is buying XRP, so bullish, or Trump is buying, but it's like, it's probably going to crash. But I don't think that's probably the way to look at it. I think it probably is quite bullish. And especially if my speculation would be that him and others have probably positioned themselves ahead of time. It's sort of like and he's also proposing no crypto tax. So imagine this scenario where you can buy a bunch of crypto, create a law where there's no taxes. You can position yourself ahead of time. You could kind of add willy-nilly coins to that reserve, and then you just have you just by executive order start acquiring and pumping your own positions with the U.S. government. It's kind of like a pump and dump on the world. And if you put some sort of long-term commitment onto that buying process of 4 to 5 years, and it's a considerable amount, there's going to be a lot of people speculating around that, and it's just going to drive price up, I think, most likely. I think you'd probably buy everything in there, and the thesis that price is going to trade higher probably only gets invalidated if it's like, oh, we changed our mind, we're not doing this crypto reserve, or it's like, we're going to acquire $5 million of each coin, which it doesn't sound like it's going to be the case. So yeah, that's my high time frame perspective. I think a little bit of a dick move of Trump from a trader's perspective to announce that on a Sunday at 7:30 a.m. I think there's just like, if ultimately you're probably going to do better off, this is just my perspective, playing everything long that's in that reserve and playing everything else short. Like, if you want to have a bearish bias, why have it on ADA? Why not have it on some 3rd tier, 4th tier coin? This is probably going to reverse this whole pump, by the way. I think that's probably, this whole dump. I think that's probably the case here. Certainly, some of this event-driven stuff, like this is probably potential ranging scenarios, but it's also probably trending. What's my target for ETH? It's all-time highs and beyond. I don't think it's too much time too much point in discussing like specific targets like $8,000, $7,000 at this point, but let some of this move play out. But I would think like on the chart, this kind of looks, so many alerts here. This kind of looks not so surprising. You have a range here, come back, take the lows of the range, and we get continuation back to the upside. Certainly retrace a considerable amount of this pump though. But do I think, is it possible we just come and take these lows again? Sure, but I would long that. I would long everything basically with risk management. Like what's the thesis of being short on these coins? I don't really, on the high time frames, I don't really see that as being the move. Someone's asking, do I think 55K to 60K on Bitcoin is still possible? Listen guys, anything is possible. Anything is possible. Anything's possible. I saw a post from Bill Ackman today. I was going to retweet it, but then I realized it was like about conspiracy theories or something, which is fine, but I thought it was, he basically, to summarize the post, you can go to his X if you want to see it. He was basically saying, I trade based on probabilities and I trade around improbable events. And oftentimes things that I think have a better chance of happening than other people do. And sometimes I make 50, 100x, several 100x on my investments. But I also protect myself from a risk standpoint against improbable events. And that's kind of the tail side of like, you have like these really bullish targets potentially for setups on ETH or setups on XRP, but you're also protecting yourself against the quote unquote improbable events of they don't play out and we run down to 55K. So I would say that 55K, just to answer your question in the way that I think you mean it, but I have to make some assumptions here, is it possible? Okay, it's possible. So what do we do with that information? Does that mean that we should set a liquidation price or a stop loss that's beyond 55K and just let it ride? Because if we say it's not possible, is that what we do? I don't think so. I think it's improbable, but it's possible. Does it mean that we don't take any long setups unless 55K is hit? No. But if there's nice long setups down there, you might be willing to trade them. It's sort of like, I guess the point is, price is here. This is where we're at. Is 55K possible? Sort of, let's just clear off the chart. There's nothing important on here. Just these lows. Is 55K, 60K possible? Yes. But it's a long ways away. And the question you really have to ask yourself at this point is there anything that makes sense to trade now, right? Like, for me, it's always going to be a blanket no, just to set a stop, go all in and put my liquidation down here, because there's no point. There's no point. It's like saying, I didn't think it was possible, but fuck, here we are, and I guess I'm out of the game. Why do that, right? Now, could you trade a setup that makes sense? That is literally just this. It's just kind of like, my stop loss is here. I'm targeting the bullish scenario. My stop loss is 18% away. I'm targeting 160K. I think all this holds up. You can use risk management trading this, right? It's a 5-hour trade. Nothing wrong with that. Is it the most, put it under here, it's a 6-hour trade. Is this, yeah, nothing wrong with that. I would say that, you're probably, at least you're in the scenario where you're not really concerned what happens here, and maybe you can trade all this separately. But I'm sorry to kind of go on a tangent here. Sort of, I can answer the question that like anything is possible, but what's kind of trying to guess the point of the question a little bit. I'm hyper interested. I'm hyper interested in the coins that are in the reserve, but part of that is supported by the fact that they're the coins I was very interested in before the reserve. There's some of the coins I would have guessed would have been in there. XRP, ADA. I mean, I'd say I'm still interested in Litecoin, Doge, ETH, Bitcoin. You know, as far as all these other alts, it's like, I would like to have sorry, I'm just reading I misunderstood something that's being written. I would like to say, like, you can only spread your attention so thin. What's the point of looking at all these other millions of altcoins at this point? You can trade them, but I mean, Cardano's probably heading back up towards all-time highs. It's just probably the case. ETH is probably heading towards all-time highs. I know ETH is a bit of a bearish meme. I could go through, I'm going to go through this just quickly because I think it's kind of interesting. This particular short didn't work, but it's just the ETH updates channel in the Discord. You know, this is back last year. I like this short idea. We actually did tag this high, just tagging back into these lows at 2K. That's where we're bouncing from now. And obviously talked about that a lot on Twitter. Basically having a hard time being interested in anything but this, trading that towards all-time highs. But, you know, ETH tagged that level. Just, this is over this weekend, just saying, hey, here's a really nice tight invalidation setup. We're retesting the low again. You know, that's a 1.5% stop loss. ETH BTC chart bouncing off a key level. But it's just like, more or less for 4 months, I really had almost no interest in ETH. It's like, give me this low and I want to trade it towards all-time highs. Now that we've taken this low, I think ETH is really interesting. I think it's possible we go lower, but I think this is about as good as it gets if you want to try a bullish thesis on ETH. It's just holding up all these lows and out of this range. And, you know, I think there's potentially some fundamental drivers here. XRP probably going towards $5 plus. Every local setup on the way there is potentially 50, 60, 80, 100R trades in the trending environment. So, I've talked about this a lot. But let me just break it down for some of you who don't understand. I just took a loss up here on Bitcoin. I'm gonna take 20 losses. I'm just kidding. But I'm just gonna set up some trades here. Whatever. Just all-time highs and beyond. Let's call 125K. I think, you know, in the bullish cases we can go a lot higher. Let's just say the bullish thesis plays out. And every trade is targeting all-time highs. But we don't go straight there. This is what my future looks like. This is what my next 2 weeks looks like in the trading everything, and really nothing's working immediately. We end up ranging. I may give some different scenarios, but let's just build this all out. It's kind of a hypothetical in a case. Let's add everything. By everything, I'm basically gonna put myself in a nightmare here. I just want to give you guys a little bit of math and how this could play out. I'm gonna take breakouts too. All right, so I'm just setting up trades. This is like the entry trigger. This is the stop loss, entry trigger, stop loss, entry trigger, stop loss. I'm also going to get stopped out of this trade. So I'm just gonna draw some price action. Oh, I got front run, didn't enter anything in here, took this, price goes straight down, I take this, price breaks this down, I take this, flips this, runs this, then it reclaims all these, so it takes all of these lows, not just the Sunday low. I'm gonna take that again. I'm actually not shitting you. This is probably how I would trade this. Price rejects here. I'm going to clear off these risk reward setups as well. Where is 67K? Take that. I'm when I'm putting myself in a nightmare scenario, I'm not joking. Actually, let's give this another stop. Bear with me here, guys. This is important. All right. And we could even build out a range in here. So let me just remove these. Let me remember roughly 12, 35, 25, 16, 33, 25. Okay, whatever. Let's get rid of all this. When I say you should, I think the play here for me personally, and I could be completely wrong, is to trade trade everything. This is what I mean. All right. This is 12R. Risk 1% to make 12%. If we go to 125K, get a trigger, it doesn't work and stops you out. Take these lows, trade this. This is 35R. If you lose 1%, or you make 12%. You lose 1% or you make 35%. You get stopped out, you're down 2%. You take this, you make it, you're down 2% now. If this loses, you're gonna, on all the long thesis here, you'll be down 3% trading here. This works, you're up 25%, so you're up 22%, or 23% if this works, 25R trade. This gets stopped out. And this is if we go to 25K, I think we're probably going higher in the bullish cases, 160, something like that, maybe beyond. Get stopped out, you're down 4%. This trade works, you're up 12%, or it doesn't, you're down 4%. This trade works, you're up 27%, or you're down 5%. This trade works, you're down 6%, or you're up 10%. This trade works, you're down 7%, or you're up, plus or minus 13, so you're up 6%. You can tighten this up. It's just the so what we can talk about, like having having a long bias here, how can it be exploited as an edge in the market, right? Like having a long bias towards all-time highs, even in the scenarios, and let me just clean this up a little bit. Even in the scenarios where locally you're just getting absolutely fucked. Even if you get some bounces, but you don't take profits, and you just round trip everything. I'm not even saying you have to. I'm just putting myself in the shitty scenario. Oh, this looks great. It's working. Reject. Take these lows. Oh, I'm going to re-enter. Reject. Take these lows. Oh, you know, you're holding everything towards all-time highs. Well, if the long thesis plays out from any of these levels, you win, even if you lost on all of them. So what fucks you here? If nothing works, and how bad are you fucked? 1, 2, 3, 4, 5, 6, 7%. You're down 7%. Now, are there cases where we start thinking about these a little differently? Maybe we are removing the risk from some of these setups. We're not even taking stops at a certain point. Yes, and there's certainly other ways to manage some of that risk. But let's just say this is sort of this just turns into a grinding downtrend, retracing everything. And a week from now, 2 weeks from now, 3 weeks from now, we're trading back at these lows and lower. I still think there's an edge in trading everything long here, in my opinion. But what you don't want to do is have 25% or 30% or 40% of your account risk, because you can't play this game. And this is just a game. This is just a game. So the game only works if you size correctly and you understand. You're not trying to, you don't know what's going to happen. You just know if you're going to play the bullish sides, what are the levels, the structures you want to play? You can play, you're taking this trade or the trade I took today for the aggressive scenario. Boom, you're in this trade. Holy fuck, you're up 35R. Great, don't have to worry about all this. But it doesn't work, you're trading down here. Starts working, oh, we've run the lows again. We took all the lows. Oh, this looks bad, we're really gonna take this. Price reclaims, I'm long again. This is literally, I think, almost exactly how I'm gonna trade this. And the only way that I'm not going to take any of these trades is just if the level just breaks down. I'm sitting there and it's like, yeah, I'm not gonna take that. I'll just wait for lower. But that's my opinion. And you can just extrapolate this, like, you can extrapolate this whole premise here to the bottom or to the top of trade. So I'm gonna make a kind of a grand point here, I think, if I can. So, all right, it's just every single position didn't work. You got stopped out of everything. You even traded down into the, you know, I have that POC GP idea here at, you know, around 66, 67K. And that gets run as well. You're down 7%. Price just breaks down. And we're trading at 50K. Bam. You're taking that trade. I'm just giving an example. You're down 7%. You know, you try to set something up here. And you're just back to trading in a big range. Even this happens, you're perfectly fine. In my view. You got fucked, definitely. You're completely wrong. You're completely wrong. You longed everything. You longed everything towards all-time highs, and price just actually went straight back down to 50K to 30K. You're probably coming out of that all okay. That's how I think of managing your risk. Well, being really aggressive, right? And if you're right, you get a big payday, but you're protected against the downside. So let me just set this up a little bit differently here. And I'm gonna make 2 points. 1 point would be just getting long here and putting your liquidation down at 50, 60K, whatever. Let's just put it down there. I have no idea, by the way, if that's what you're proposing as the setup. I'm just going to make the example. So you're basically like, you're like 3x long, right? So if price goes up, you're going to make 150% on your account instead of something like 20% or 30%. And then if the price comes down here, 60K, you're going to lose your everything. And keep in mind, this requires you probably to sit through this and not freak out and close for half your trading account, right? Like you basically are like in it no matter what. I don't think there's any reason to trade it like this. What I would prefer to do if I wanted more exposure is just keep trading everything up. So let's just say, like in some bullish cases where you think, oh, I should have just 3x long, we just went straight up anyways. Let me tighten this up a little bit just so, because the chart's gonna get really messy. Okay. Let's just say, let's pretend we get into this long. We can even pretend we don't, doesn't really matter. You're basically, I would prefer to start building risk this way. Like this is in profits, add to the position as a separate position. Price starts reclaiming these, it starts trending, adding into something like this. Well, I got the angle more or less right. You know, retesting, trending price action, take some local lows, and just keep adding that way. And this is all running up into profits. This is running into profits. You're just adding, and you kind of get the same result, but you end up with something like, even if you don't move up any stop losses, you end up with something like 3% risk for the same bang for your buck, and you're not risking 100% of your account. Yeah, you're risking 3% for something like 100%, 120% instead of risking. But of course, it's a little less likely to play out because you're lower probability setups than just not going to 60K. But your kind of payoff for that is you're risking 3% instead of 100%. I wanted to say, okay, something I saw here. All right, so Noel says, Lucky, you surely heard of Tom Hogard, aka Trader Tom. What do you think of his trading approach? He basically said he's risking 40 to 50% of his account in one trade, which only makes sense to him. Genuinely wondering about your view on that. Well, let me say something. It's something to say that it's like some of that is sort of like this. It's sort of like big balls, you know, gunslinging trader. He's got this, you know, this feeling, this experience, and he's like, now's the time to just go all in. I'm gonna risk half. I'm gonna whatever it is. I think that's sort of like, it's sort of like good advice for no one, because no one who is capable of making that type of decision needs anyone's advice about it. Basically, you should be told, any new trader or any trader should just be told every reason exactly why they should never do that. That's all they need to hear over and over again. This is why you should never do that, because this is the repercussions of trading this way. This is the statistical analysis. These are the probabilities of this type of trading working out in any positive way. But if you're a professional trader with 25 years experience and you understand, like you said, it's a trade that only makes sense to him, you understand exactly what you're doing, then yeah, do whatever the fuck you want. I mean, you're going to reap but you've been trading for 25, 30 years, right? like who's going to tell you otherwise? Somebody, does somebody need to hear like sitting here shaking like, oh my God, I'm going to risk 50%. It's a trade only I understand. I hope this works. Oh my God. No, right? Like it's not advice for anyone, because anyone who needs to be given that advice shouldn't be taking the advice, if that makes sense. But I would say this, I'm not sure, but some people trade a small amount of their capital as a trading account. So they basically start a trading account, they trade it up, they withdraw it, and they start again. And they could blow up that trading account, and then they just start another one. Like in a way, that's what like you might do with a scalping session. So let's just say that you're scalping, but you don't like leaving a bunch of money on exchange. It's kind of like a version of that. You set up your scalping account for the day, you deposit some small amount of funds in there, and you're trading with leverage, and just whatever the end result of the day is, you could blow up the account, you could 10x the account, but it actually represents a small amount of your I don't want to say a portfolio. What am I trying to say? It's like a small fraction of your actual trading capital, your actual trading account. So like a good example of that is when I did that video on Rollbit, right? Trading $200 or whatever it was up to $6,000 in one day. And I took a bunch of trades and everything was relatively high risk to the account, but it's not like I'm doing that with my net worth, right? It's like, it doesn't matter. If I lose the $200, it's irrelevant. And that probably makes the trading a little bit easier. So like, let's just imagine, that's like let's say you hit a 30x, right? On doing that in a day. Well, that's great. If you started that day with, let's say 1% of your capital and you hit a 30x, you just made 30% in a day. But the account was 1% of your capital to start with. If it's 0.5%, then you made 15% in a day, right? So that's great. It's incredible. You could literally stick 0.5% of your trading account into a Rollbit or whatever you're scalping on trading account, and you traded up 10x, 20x, 30x, and you made 3%, 5%, 10%, or you blew up 0.5% trading all day. What's wrong with that, right? I think that's how it should be approached. Like, because that way, one day you could 10x the account, and the next day you could blow it up. So one day you made 5% with 0.5% in there, and the next day you lost. One day you lost 0.5%, the next day you made 5%. The next day you lose 0.5%, the next day you lose 0.5%. So you're down 1.5, up 5 from 2 days before, and then you 10x the account. So you made 10% that day. That's sort of more how I would approach that, and I'm not sure if that's what Tom Hogard or Trader Tom is doing in those scenarios. He argues that it doesn't make much sense for him risking 1-2% of his personal account while letting the other 95% just sit around. I have a hard time believing that he's saying what it sounds like he's saying, but it's possible. It just sounds kind of dumb to me, to be honest. But I don't know how he trades, so it just depends. It just depends. What if you're asleep? Would you set limit orders? Sometimes. Usually trade a little smaller, rare cases, but there's times where I set them. Risking 50% of your account per trade, like if he's actually risking 50%, like he has no plans out, it's either he's 50% down and his net worth literally can lose 2 trades and he's done. So it's kind of like, oh, great for you, buddy. I mean, I don't know. It's I just have a hard time thinking that that's but that's the type. This is what I don't like about that type of approach to trading, or like even rhetoric, you could say, is it's exactly what every trader wants to hear. Every new trader wants to hear. That's more like it, baby. Like I got some great setup. I've often thought, oh, I should have traded way more risk. Tom knows what he's talking about. Like if I risk 50%, then baby, I'm building. I do that 3-4 times. I hit big trades. That's how you build a trading account. It's not, right? Like this. It's terrible advice for 99.999% of traders. You could say it's probably terrible advice for 99% of traders. It's good advice for the 1% that get really lucky. Yeah, so that's a totally different story. Like you said, yeah, I think he's risking maybe like 4% of his net worth and risk 50% of that balance. Then still pretty wild. Well, that's not wild at all. That's risking 2% of per trade. But that might be what he's talking about, right? Like for example, my trading account balance stays static for a long time. Like I'm not trading a parabolic compounded account, right? I'm just trading the same size for a long time and then stepping up my account. So frankly, this is what I would think is the best process. If you just want to learn how to trade, if you're watching this live stream right now and you're saying, I want to learn how to trade, I've tried it a couple times, but I've lost a lot of money and I'm really scared. Like right now, I have not had a good result. I don't want to lose a bunch of money, but I'm interested in it, but I'm scared. This is the best way to approach it, in my opinion. Day one, I really don't want to draw a bunch of stuff, but I'm not going to type. I'm going to do it quick. Oh, fuck, I got to get rid of these arrows. Okay, day one. I might stop drawing this if it takes too long. Paper trade. Paper. That doesn't look like a word. I'm not going to write. Paper trade. Learn the basics. Learn the basics. Learn how to position size. Learn how to set up trades. Take a bunch of trades. Build up a sample size. Nothing bad is going to happen. Worst case scenario, you're going to waste some time. 90+% of traders are going to lose money from day one. Okay, whatever you start with, you're losing some percentage of it unless you get lucky or unless you are some outlier. But we just know statistically you're going to lose. So no harm with that. Start paper trading. Day XX, whenever you feel like, okay, I understand what's going on. I understand how much I'm risking per trade. I understand how to enter a trade, plan a setup, have a stop loss, have a target. I understand that there's a bunch of variables and things that can happen in between. I'm comfortable to put on some risk. I want to trade real money. But hey, all you're trying to do is protect yourself. Day two, this isn't actual day two, but it's day XXX. Put on a little bit of risk. Let's just say you have $10,000 that you could start trading with. Put $10 into a trading account. Treat it like a real trading account. Just see how you do. Here's the worst case scenario. You are going to lose $10. You're going to give up on trading and you're going to say, I hate this. This wasn't for me. I didn't like it. Okay, you wasted some time. You did some paper trading. You learned some stuff. You put $10 into an account. You blew it up. You don't like it. But here's the rule that's going to save you. Until you can build this account over a sample of 30, 40, 50, 60 trades and you have net positive, you're staying at $10. Say you blow it up and you still want to trade. You're saying, I blew it up, I learned some lessons, I still want to trade. Go again with $10. Maybe step back to paper trading if you're really risk averse. Once this has a positive result, you're $10. Step 3, $50. Take some more trades. Don't step up to $10,000. Take some more trades. Until this has a positive result over some meaningful sample of trades, you're stuck at $50. That's your rule. This is for people who are risk averse. They want to learn how to trade. They don't want to lose a bunch of money. Put in the work. And here's what's going to happen. This has a positive result. Step 4, $150. You are stuck at $150 until this has a positive result over a meaningful sample of trades. Is this boring? Yes, but you're not going to lose all $10,000. But what's the magic about this? The magic about this is step 5 is $300. But when you get to $300 into your account, you've traded paper trading successfully, profitably, $10 profitably, $50 profitably, $150 profitably, over samples of 30, 40, 50 trades. You're at $300 and you're an actually pretty damn experienced trader. You blow through your trade sample at 300, everything's going great. You're like, man, I love trading. This is amazing. You've kept your risk quite small, and by the time your risk is getting a little bit up there, $600 account, 500, whatever the next step is here, you've sample traded multiple accounts over 30, 40 trades with a positive result, or you're stuck and you go back a step. And as boring as this seems, this is probably going to get the average person on a much steeper trajectory to success than starting with $10,000 on step 1. This is probably the death sentence for most traders. They have $10,000. They just start trading. They lose it all. I think this is how most traders should progress. And you could say, but that's a waste of time. I want to do this, blah, blah, blah. Then do it. Okay? If that's what you want to do, if you want to start with 10,000, 5,000, 10,000, 100x leverage one trade, do whatever you want. But I think this is probably the best process. And here's the holy grail. You only get to the end if you are an incredibly diligent, disciplined, profitable trader, and on that day, you've probably made some money along the way. You're trading your $10,000. You're stepping into the arena with the account size you wanted to start with as a fucking badass trader. And you solved a lot of your problems down here. So I consider this, I always say a trader is their most vulnerable. A trader's always vulnerable, right? To the market and to the learning process. And you'll learn lessons 20 years in that you hadn't learned before. But they're most vulnerable here. What do you do when you're your most vulnerable? You take on the least amount of risk. Paper trade. You don't understand anything. You don't know anything. You don't even know what you're doing. You don't have an edge. You don't even understand the process of trading. Paper trade. You learn a little bit. You apply it with $10. You maybe get stuck here for a little bit. You learn a lot of lessons that every trader learns at the beginning that are really expensive to learn with $10,000. They're going to be 30, 40, 50, 60% of your account no matter what. But you were trading with $10, so that's a good time to learn that lesson. You learn a few more lessons that cost you 50, 60, 70% of your account that you have to learn. But you were only here. Okay, you're okay. Now you take all those lessons, you apply them here. And this process is going to do wonders for most people because by the time they're here, they're an incredibly experienced trader. And by the time they just can't get unstuck and they just don't like trading, it's not for them, they quit somewhere in here and it's kind of like, yeah, they wasted some time, but they were going to do that anyways and they didn't lose all their money. That's my opinion. Kind of opposite of the kind of Hogarth gunslinger approach there, but I doubt he'd have much of a different opinion for a new trader. I know it's really boring. Yeah, Gabby, I'll upgrade you. Just Gabby saying, can you give me another chance to get the role in your Discord? I basically had a thing where there's 10,500 people in the Discord. I said, if you watch these 4 videos, and this is the public Discord, not the paid Discord, I will give you a role in the Discord, and we'll do some more stuff, and you know, whatever. What was it? 1% of people in the Discord after a month or so watch the videos. But you came in later, you watched them, and you want the role, I will do that. Purple Punch says, I'm doing this with my $200 port, risking 1% per trade. Hopefully one day I can join the Discord. That's great. Someone says, but you can't trade 1% on $10. I'm not sure why. I think there's a lot of exchanges that allow you that, but maybe I'm wrong. SFXQ says, most people know what to do, but they just don't do it. Agreed. Of course. Yeah, that's going to be a big problem. I think here's just the hard part about it. It's like some of this advice is just like, okay, I get it, but man, I'm not doing that. It's like, okay, it's going to cost you $10,000 then. If you're okay with that, then... Or for some people, $100,000, $500,000, $1 million. Like whatever you start with, just assume that's what's going to cost you, because you're not going to make money trading. You're not a trader. So what do you think is going to happen? And you're going to end up in a spiral. You're going to say, holy shit, I just lost half my money. I need to make this all back. I need to keep trading until I make it back. And it's like, why do you think you're going to make it back? You're not even learning how to trade. You're just taking trades, hoping to make your money back. You're already a losing trader. You're going to keep losing, like 99% of people do, 95%. Okay. It's just, it's the only way I would recommend anyone start trading for one reason, and that is because trading is dangerous as a beginner, and you should keep it boring. I know it's boring, but trading shouldn't be too exciting. You can have a little bit of fun with it, but it should, the more boring the better. Get some experience and have a long career. Don't end up a corpse on the side of the road. Mexc says, Lucky, would it be reasonable to start trading just on spot, no leverage, just higher time frame with risk management? Well, let me just tell you, Mexc, if somebody as a new trader asked me that question, I would just say no. I mean, if you think that, if the question is, hey, Lucky, I have $100,000, I'm not a trader, would it be safe or reasonable for me to just start trading it, but I won't use any leverage? I'd say no. Most people are going to lose everything with no leverage. But it's just spot on high time frame. Okay, well, what kind of trades are you going to take? I don't know. I'm not a trader. I don't even know how to set up a trade. I'm just going to buy stuff. Okay, why? It's like, what's the edge? Why do you think you're going to make money when you're competing against sharks whose only job is to take all your money? Well, I'm just going to see something that I think is going to go up. I'm going to buy it on spot and going to sell it when I'm in a profit. Like, that's the reason. It's just bad advice, because if you're not a trader and you have no reason to suspect that you're going to have a profitable result, you have no personal data, you're going to lose a lot of money trading spot. Most people do, right? Do you think that people who just go start trading the stock market, just buying stocks, they're going to make money because it's spot? No. It's a pretty volatile market, right? It's like a leverage market. There's things going up, going down 90% all the time. Boom, one trade, you're out. I bought spot. It's down 90%, you're done. Someone says, a corpse on the, Noel says, a corpse on the side of the road. That's a wild way of describing it. I mean, it kind of is, right? It's just like it's like corpses littered on the side of the road. With ambitions of becoming a trader, but nobody really wanted to become a trader. They just wanted to make a lot of money. So think of trading literally as a gladiator's arena. It's like you're going in to fight people who have 20 years experience killing everybody else that enters the arena, decapitating them. And that's how they've made their living for 20 years. And you heard that if you do that, you could make a lot of money. And so your instinct was to climb over this spectator stand, get into the arena and go try to fight 3 of those guys. Because you're like, oh shit, I could make a lot of money doing this. What do you think's gonna happen? You might want to go do some training before you get into the arena with the gladiators. Henny Z says, I 100% agree. I opened an account with $50 USD that I managed to bring to $2,000, which I ended blowing up. Excellent lesson. Learning with a small amount also helps you to manage your emotions, at least for right now. Yeah, impressive that you ran it up to 2K. So something kind of cool to do would be, let's just say that you're obviously trading with high risk, right? So, and you're probably leveraging that risk into your next trades and like scaling your account with your profits. I would imagine that's the only way you go from 50 to 2K back to 0. Something kind of cool to do would have been to take out $1,900 or take it out of the 1,000 or whatever. Take out some amount that's a multiple and start again with $50. Why is my channel lucky? Chart ape? Because I'm just lucky. I mean, there's a little bit of it's kind of a little bit of a play on like the probabilistic nature of the market. Like, you take a trade, you have no idea if it's going to work or not, and it worked, you're lucky. It doesn't, you're unlucky. We're just flipping coins. Coming back down to retest these lows, pretty interesting. But can I tell you guys just the honest truth here? I fucking hate doing live streams talking about taking live trades and trade setups, because just there's someone's signing up or logging into the live stream right now and they see this and it's like, okay, I'm taking a long trade here. I just explained like trading everything, all that stuff. I explained all that. They're just clicking on the live stream like, oh, I saw this guy on Twitter. I've seen him a few times. I'm interested. He looks like he's always trading, 200x leverage and 5,000, and they're like, oh my god, he's taking a trade. I gotta get into this. It's just like, that's why I hate it. It's like, I don't know. It's just not. I don't think this is for anyone without experience. But you kind of have to talk about what you're doing and why and explain the process, or people can't learn. But it's like there's just so many like uncontrollable variables, and I hate when people have to be told. I hate the idea that somebody, like, you could post a trade idea, you could explain exactly, I'm looking for this, if we hold this up, I'll take along with a little bit of risk, and if we break it down, I'll trade the next level. And then they need to be told to get into that trade. They need to be, I don't know. There's something I don't like about it at all. It's one of the reasons I like having the members Discord, is it's like, there's this barrier of entry. It's not a live stream with just random people signing on saying, what the heck is going on here? They don't understand anything. And there's like, there's some sort of like commitment to some degree, whether or not you go through all the educational materials, which I think you basically need to, you're at least, whether you like it or not, exposed to everything I have to say. Like, you might hear the same thing 20 times and be like, oh, I'm tired of hearing this, but at least I know you have to see it, or you don't see the trade ideas I'm taking and how I'm trading them. You can't see the I'm taking this setup without seeing everything else that explains exactly what I'm doing. Someone asking, Lucky, how do you explain why price is dumping after Trump said bullish things about crypto? I mean, it's dumping because there's more people selling than buying, but I think generally, I'm going to scroll here really quickly. It's a bunch of people long the bullish news and probably over leverage, overexposed, and a lot of that buying pressure comes in and then it gets tested, right? And people start selling into taking profits, getting out of underwater longs. You know, people are going to have compounded some of those positions, and it just drives price down, right? Everybody starts getting, all the selling pressure just piles into itself. But I'm gonna share this really quickly. Why is, it's like I know exactly where this is, but why is it always so hard to find? Sorry, guys. Probably be better just to do this. Ba, 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 ba. Okay. So basically liquidity kind of builds up under this impulse, right? Because everybody's longing into it. Shorts are getting squeezed out. There's a lot of buying pressure. At some point, everybody who's available to buy has bought. And there's nothing else to drive price up locally. Liquidity is building up below. The move happens on a weekend as well, which statistically, you know, a pump on a Sunday is probably going to get seriously retraced or tested, but I guess probably not always. But it's like, this is yesterday, like, is price really going to go straight up on a Sunday and not retrace some of the move? Probably not, who knows? And this was a discussion just about like what to do. It's like, because I was dicking around yesterday, but not trading any of my main accounts. And so I said, big day, nice of Trump to drop a crypto executive order at 7:30 on Sunday morning. Interesting PA, does kind of suck. It's on a weekend. I was dicking around on a below fitting count, but not prepared to trade mains. Ideally looking for some kind of retracement out of here into the days ahead, and will likely be looking for longs. So it's kind of like, whether price breaks up, breaks down, it's like, I'm just looking for some considerable amount of this pump to retrace. I think, I made a post here saying probably nothing to fade this whole crypto reserve thing. I've already talked about it. I said I'd be watching some local structure into the New York Open. This is where I just got in. I said it's not impossible to retrace this whole move. I think it's, I believe it's possible to retrace it, or just look for some of this local stuff. Whatever, blah, 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 blah. This was the setup, you know, take these local highs. We rejected from there, didn't bounce from the local lows. But basically just have some local levels on my charts, either looking for a breakdown, maybe come test this wick, or for the more bullish ranging scenarios, just looking for some of these local levels to hold up as potential setups. But anyways, the reason kind of not getting too like, oh my God, I gotta get long on everything on the weekend, is because you have all this liquidity building up. A lot of it's been wiped out, with tons and tons and tons of aggressive longs opening up. So we can just look at open interest. This is like 1 minute chart. You know, announcement starts, 9 million, 34 million, 12 million, 17 million, 72 million positive delta, some shorts getting squeezed, longs opening, some aggressive selling into the first pullback here, some probably over leveraged trailing stops. All gets wiped out, 41 million to the downside. Price starts going higher, 19 million, 25 million, 42 million, 19 million, same thing again. Some aggressive selling into this, like as soon as price starts going down, lots of trailed stops, and it comes down on the bullish news. But you see really aggressive selling, aggressive entry, aggressive selling, aggressive, 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 and this is where it gets kind of insane. Like tons of shorts getting stopped out, 65 million positive delta, 50 million, 43 million, 21 million, 50 million, 26 million. CBD is basically going straight up. We come up to this 91K level. This was a local GP. We do start ranging for a little bit. As soon as there's a pullback, big aggressive selling, we get a big or a little bullish divergence here. Price pushes up here. And the net result of this uptrend is super aggressive buying, increasing open interest. And right now, a lot of these positions are getting run out. This is actually a little bit of a bearish divergence forming here as well as we range from running that low. So kind of the same things happening here on a low time frame, like aggressive selling into the low, some aggressive buying, 19 million, 16 million, 30.7, 7.1, 9.6. Come up and maybe take these local highs, come retest these lows. This is very similar to the setup I took earlier that didn't work, but I'm probably going to trade this low. Bybit was much crazier, or sorry, Binance was much crazier. If indeed the data is real at all. Let's zoom in here. I actually want to look at this again because I only looked at it when it was happening. But here, 8 million, 79 million, 29 million, 41 million, 130 million positive delta in this 1 minute candle. 55 million, 47 million, 40 million, all increasing open interest. 75 million in this 1 minute candle. A quick little mini flush after this, but really not much. This was actually pretty sizable. This is a short squeeze candle, another 70 million, 47 million. Not that much aggressive selling compared to what's coming in here. 34. This is minute by minute. 18 million, 22 million, 26 million, 15 million up here, 36 million, 45 million, 37 million, 106 million up at the highs here. A little bit of a range, a little bit of selling, not much. 23 million, 36 million, 46 million, 115 million, open interest increasing, 143 million. Like, this is kind of insane. There's definitely some aggressive trailing here. I mean, obviously with these numbers, people are leveraging to the hilt, and these small pullbacks, like you see some outsized closing here because people are like, oh shit, it's not going up. That's probably what's happening. 53 million, but still just mostly a positive delta. 37 million, 40 million, 27, 15. I'm not even saying those smaller numbers, but again, a quick pullback, liquidate probably some or stop out some overextended longs. 47 million, 96 million, 51, 26, 71, 63, 62 million. Just trying to see what we got up at the highs here. 62. We have a big flush down here, 27.75. We start seeing some aggressive longs opening again. Yeah, so the net positive, the net result of all of this is that on this whole move, we have tons of longs opening, some closing, opening. You know, if you want to call it like an average position, obviously not one person. It's kind of averaged in somewhere in here. The average is kind of getting tested, and we start seeing aggressive closing, and mostly this is people round tripping. You know, Binance looks kind of interesting here. Like, it looks like open interest is doing kind of more. It makes a little bit more sense. Like Binance's or Bybit's open interest just kind of going up, flat here, up. This kind of looks more like what you'd expect to see, which is big open interest increased, big sell-offs, risk coming out of the market, positions getting stopped out. It's kind of interesting. And you're going to have a lot of people who basically lost money on this pump, right? Like even people who longed right in the early days or early part of the pump, some of those will have added probably, but you have people longing all the way up here, and then basically their stop losses are all exposed, either as trailing, break evens, whatever, and then they just all run into each other, and price ends up kind of back near the origin of the impulse. Maybe some of these guys that got in early were in nice profits, they make slight profits, price starts ranging, people get in higher again, we keep ranging, and all the people that were in unrealized profits here end up all stopped out, end up losing money at the end of the day because they stop out, they chase in, they stop out, chase, and we end up in a range here or something like that. But yeah, it looks like most of the positions, or many of the positions, are out. Some will have trailed back in or come back in on the way up. We have a bullish divergence though on Bybit. Like the CVD is much more down, or it's making a new low. Open interest kind of looks a little funny here. A little bearish divergence here, forming as we range, as some aggressive longs open. That's evident on Bybit and Binance. Although Binance, it's not as extreme. I'll just do this really quickly. Gabby's asking, before you upgrade me, can you show me where the 4 videos are at so I can write down what I understood, please? Yeah, basically what I did is I just suggested, or I created a channel in the public Discord just with the core part of this. You know, it's kind of like an educational channel explaining concepts. The core part was all of these videos required watching. This is a trading seminar. This is like a 20-minute video essentially explaining risk management, how to size your trades, why to trade them. And if you if you made the effort to watch those videos, there's no 10,000 people in here, and put your takeaway, just basically your notes, like what you got out of those videos. And we had about 100 and some people do it, and I think actually reading through these is quite interesting. In the trading psychology channel, lots of good takeaways. Then I was going to upgrade you and give you an additional role, which give you access to another channel, and did some things in there for those members specifically. I actually ended up opening this as a channel everybody could type in. But is there a way just to jump to the top on Discord? Maybe I have to pin the top message. Doesn't matter. Anyways, a very small percentage of people actually did it. But you go to the Absolute Alpha channel, then you write in the Trader Psychology channel. And I said early on that I can promise you this. If I see that I have a higher output than the other 9,000 people in here combined, I'll create a new role for the few people that put in any effort and do the next 30 days with a small group. So basically I'm just saying for the free members, obviously if you're a paid member, you get access to everything I'm doing and there's a lot more stuff. Oh, I just realized half the channel's screen's cut off so you can't even see what I'm pointing at. But bottom line is you have access if you're a paid member regardless. But if you're not a paid member, basically do yourself a favor, watch these videos, they're super important, demonstrate what you took away from them, and I'll upgrade your role, and a small percentage of people did it. I mean, more people responded with emojis to me saying, hey, I expect you to put in some work, than actually responded to the little challenge. But anyways, that's what's going on. Hey, so basically my plan along these lows, if they don't get stopped out, along these lows, if I get stopped out, like I said before, and basically long everything with risk management. And if I get stopped out of everything, then I'm trading much lower, and it's trading everything towards all-time highs. I would say that's my best synopsis of how I would trade this. Is it optimal? Well, no, there's probably, you know, if I'm not talking to people that I'm going to see on a live stream every, you know, week, once a week or every 3 days, you could say, well, but why not like take this long and then maybe like TP into, you know, this kind of setup if there's any weakness, and then if price starts trending, maybe look to just add back to your position, do something like this, or maybe add back on a retest. Yeah, there's so many ways to trade this, right? But generally speaking, I think the most straightforward way to trade this on a high time frame, and my general plan, is going to be looking for longs towards all-time highs on XRP, Bitcoin, Doge, ETH. Try to compound those positions. Willing to try some more of the aggressive setups into this retracement. And I think that's going to end up being EV positive, even if I take some stops. If not, that's all right. Then I just lost on the whole thesis, and we're just going down to 50K, and I took some stops along the way. Let me see. Is there anything else to really say about it? I'm probably going to be looking for my short setups on other bullshit. I'm going to do some bullshit scanning. You know, probably going to be looking on the next pump, if there is one at all. Go back to some of our near and dear favorite meme coins. Maybe take another look at Pepe. Maybe take another look at WIF. Doge is my only bull meme coin. I'm gonna reserve that for the but yeah, come back and take my short setups on some of the things I think are going to be punished by my bullish thesis. So hopefully still end up exposed to the market. I'm out of this short from up here on Pepe. We ended up with a 65% move down. Target was into these lows. I closed it down here. I might have to reconsider some shorts on Pepe, because I still want to be exposed to some extent into the bear market scenario. I just don't want to be exposed to it on the things I'm more bullish on, because again, I could be completely wrong. So take everything I'm saying, understanding I have my own logic for it. I can explain the logic for it. But I think what's probably going to happen is, for my scenario, if my scenario plays out, is some of these coins like ADA, you know, some of these OGs, maybe even just the speculation of, well, ADA was added, Doge was added, some of these other coins, maybe that's a driving force for coins like Litecoin, maybe not. Maybe Litecoin gets added in the future, maybe not. But some of those crypto reserve coins, I had bullish theses on anyways. I'm going to keep trading towards those. And I think if my bullish thesis plays out, a lot of attention and a lot of the buying pressure of the market could rotate into those coins as that all progresses and people realize, oh, wow, they are going up. Again, this is if I'm right. And that could suck some of the liquidity more out of coins like Pepe, WIF, and other coins. I probably need to do a little bit more of a thoughtful approach or some thoughtful analysis on which coins exactly I'm going to be taking my short setups on. But I almost feel comfortable just taking them on any of the bullshit from the last kind of bull narrative. Because even though Pepe is down, we're down 60% here. Personally, I think all this can still come. It's another 90% to the downside. And I think all this can actually come even in the case where Bitcoin's going to new all-time highs, ADA, XRP, all these coins. I think it can come. So I think it comes no matter, not necessarily this, but lower. If Bitcoin is just bearish and Bitcoin's going down another 30, 40, 50%, well, then I think these altcoins are probably going to get blown to hell. But I actually think the short thesis on these coins probably works in some scenarios too, where we see some of these other coins bullish. I hope that all makes sense. That's my plan. I'll have long and short setups in the bag, but short on the coins I'm more bearish on, long on the coins I'm more bullish on. And if everything breaks down, then hopefully my shorts print when my longs get stopped out. The absolute best case scenario is I'm completely right and my longs print and my shorts print, everything prints. And if I'm half right, then if my longs print, my shorts get stopped out, my longs print, I'm happy. Blah, 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 blah. Owen says, what tips would you give for trading a $1,000 account? I would trade it no differently than any other account. And if you're a new trader and you only have $1,000, my tips would be not to trade it until you understand that it doesn't matter what the size of the account is. It doesn't change the math. It doesn't change the trade setups you take. Yes, again, people will say, yeah, but can't you take on more risk? If you have a small account and you need to build up capital and you're willing to risk and say, you understand you have a bigger chance of blowing up, blah, blah, blah. Yes. Yeah. But by the time you're ready to make that decision, you won't need anyone to tell you because you already understand all that stuff. You have all your own trading data. So you don't need anyone to tell you to do that. You need someone to tell you not to do that because you cannot do that until you've gone through step 1, 2, 3, 4, 5. You understand exactly what you're doing. You actually have an edge to take more risk on with, and then you make that decision. But it's not even something to think about as a new trader because you're just going to lose all your money. Kato says, hey Lucky, do you have any suggestion how to switch from hodler mentality to trader? FOMO of missing alt season was high, so I put too much risk on market. Well, I'll just say this. Being a trader isn't a mentality, it's a skill. Right? So it's kind of like, hey, I go ice skating. Can you tell me how to go from a put on my ice skates, never been on the ice before mentality to an NHL player mentality? It's like that's not going to make you an NHL player. So what I would say is to take on a trader's mentality, you have to become a trader. And those are skills. It's not a mindset. So there's mindset elements to it that you're applying. So I'd say don't put any risk into the market. Like a lot of people will do this, and I understand because they're not a trader. They'll say, I'm going to have my HODL portfolio while I learn to trade. So I'm holding stuff, and it's whatever. I'm just going to keep holding it, and I'm going to start learning about trading. And they might even trade paper trading accounts and small accounts. Maybe it's like, oh, I'm taking 2% of my holding portfolio. But so I don't think there's anything wrong with that, because you can't tell someone, like, there's no people can't do something that they shouldn't do something that they don't understand. And the unfortunate thing is, a lot of people are just going to hold a bunch of coins because they don't understand why they shouldn't, and they don't understand the actual risks they're taking. And it's not that they can't make money, it's just, but what they can do is start going down the process of becoming a trader. They shouldn't be putting any risk in the market. And by the time, eventually you're going to understand some things. Like, I actually had a testimony or some comment very recently where somebody basically said, hey, basically, I've started going through, the educational stuff and in the Discord, and my HODL portfolio, I'm actually making some money. I'm doing okay in my trading, but my hold portfolio is getting decimated. And it's like, well, my thoughts on that would be, you've essentially learned some things, and you started applying risk management and asymmetric risk reward and some kind of systemized way to make trading decisions on one side. And the other side, you just bought stuff and you're holding it, and you're not applying anything, right? Like, you're not making any active decisions with any reason to make them. So it's not kind of surprising that that's happening. But there's ways to hold, quote unquote, hold all with risk management and understand the volatility in your positions and all that stuff. But anyways, my point, if I'm making one at all, is to take on a trader's mentality, you have to become a trader. And so I would do that slowly and I would do that. Well, you can do it quickly, but I would do it with very little risk, if any at all, at the start. Scale that up, and eventually you'll start understanding, oh my God, I should be applying these concepts that I have an understanding of and history with to my own positions, even in my spot portfolio that I'm holding. Someone's saying that the videos have copyright strikes. That's very possible. I just pulled them off YouTube. Somebody's probably reposted them. You might have to do a Google search. Somebody says, I have a 25K account which I'm scared to trade already. I haven't even read the rest. I like it. I like that you're scared to trade it, because you probably should be. So my initial thought was that my bank offers 4% API, flex daily, it's about $3. That's my stop loss, basically per trade per day, $3 trade per day. Yeah, I don't mind that kind of like logic, right? Like, you're basically saying, I got $3 a day that I can put at risk. Maybe I'm taking 4 or 5 hour trades, so maybe I'm gonna lose at $3 on any given day, or I'm gonna make $12 to $15, and you're learning that way. Can I just be a little more? I don't mind that. I don't mind that. Like, sometimes people just need to play a mental game, right? It's like I don't want to trade with this money. I'm scared. I want to learn. Like, I want to put something in the market, and so, how can I? And the mental game is just like, what can I justify? And I think that's fine. I don't mind, the numbers, because basically it's like, you lose if you stick to it. Let's just say you're giving yourself $3 a day to put at risk in the market. Worst case scenario, you lose every day for a year. You're gonna lose $1,000 over the course of a year if you lose literally 100% of every day. So if you're okay with that and reassessing in a year, that's your worst case scenario, then, and you can stick to it, it's fine. But I would just say this, that more than figuring out like the absolute minimum that you can risk, because here's your problem, his name is Gamalana Mexc, is that you need to learn. Okay? You have a lot to learn. Why are you putting a $3 break on yourself? Like, oh, I lost my $3, I guess I'm done for the day. No. Open up a paper trading account. That's why I would say you've got to take hundreds of trades, thousands of trades. Take trades. Learn different concepts. Like, get in the market. Like, I feel like people, it's one of the reasons why I'm so adamant about paper trading at the beginning, because you got to, I got a sidetrack here. Seeker says, bro, take a trade or something. Goddamn. Dude, are you an idiot? What do you think trading is? I'm long, I'm short, I'm long, I'm short, I'm short, I'm long, I'm short, short, long, long, short, 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 long, long, long. Trading is this. I'm in a position. I make money. When? When do I make money if I enter a long here? Think about it for a second. I make money when price goes away from my position in the right direction. And it has to go away enough to cover the fees, cover the risk, cover the stop loss. Everything I do, everything that happens in price between where I enter, where I stop, and when I take profits is irrelevant. It's irrelevant. You do not make money entering a trade. Most of your time as a trader is spent sitting and doing fucking nothing. You plan a trade, you define a trade, and you take a trade. Are there other setups here? Yeah, you could wait for this to break out, the bearish divergences, whatever you're looking at as data, and you might take something like that as a breakout. Right now, we're in a choppy range, prices around a key level. I'd like to come retest this low. I'd be willing to take a long. After I take that trade, what the fuck do you think I'm going to be doing? Literally sitting and doing nothing, because all your money is made not by pressing buttons, by sitting and doing nothing. You take a trade, dumbass. All right. I'm sitting here chatting, waiting for a trade I'm willing to take. That's it. I don't know what's going to happen. Okay, so the guy I was talking to him about his thing. Oh, the point is, people handicap themselves. It's one of the reasons that, like, trading a big account, like, let's just say on the flip, you put your 25K into the market, and you're now limited by all of the anxiety and fear that comes with losing that money, and you probably 99% of the time are going to start keep losing it. So you might say, like, okay, I don't want to lose this money, and you put a rule: I can only take one trade per day. If it loses, I can't take another trade. I can only take one trade per week, and I don't want to lose. And what you're doing is you're just putting the brakes on, right? Because you can't learn. You can't learn fast enough. You can't take enough trades. But if you can paper trade, you can learn a lot. You can, and people say, but you don't learn how to deal with the fear and the emotions. You don't need to learn that now. Okay, there's lots to learn between fear and emotions and all of the other aspects of trading. And to learn, you need to be taking a lot of trades. So I would just say, as I think I was saying, I like the general thought process you have here, is that you're earning $3 a day on that money anyways, and you could just put it at risk. And in a way, it's like your break even at the end of the event, at the end of the year. You're putting all your interest at risk. But the thing I don't like about it is it's kind of like an arbitrary break on the amount of trades you can take. I don't think there's anything wrong. I've given some examples in the Discord where I took, several hundred trades in a day, scalps, and testing different ideas. And so, yeah. I'd prefer new traders go more that direction. Don't even think about the money. Who cares? Don't just trade nothing. Paper trade. If it's like you want to risk something, find a platform that lets you make such small positions that you can break your $3 up into 10, 30-cent trades, right? Like, you need to be taking a bunch of trades. Because what I would hate is you to get into situations where it's like I'm going to give two scenarios, which is you have one trade a day at $3 risk. And I mean, this is the situation I might be in, right? Like, you take this setup, it doesn't work, but you lost your $3, so you don't even care anymore. And all of a sudden, you could have been in this setup, and this is all in your data, this is all in your experience, this is all in whatever, but you're not taking it for some arbitrary reason, and you're not getting the experience of actually trading any of this because your break is that you can take one $3 trade per day. And I don't think that's a good way to learn. I think it's a good way to manage your risk. I don't think it's a good way to learn. Hope that makes sense. I spend more time on crypto. Yeah, I understand the idea. Like, people want this live stream to be like, I'm taking this trade, I'm taking this trade, okay, I'm in this trade, take profit, just got hit. But it's like, I'm trading Bitcoin, I'm trading some of these things. I mean, could there have been a trade in here? Probably, but you know, prices moved like up and down 0.7, 0.8%. It's possible, but I'm explaining what I'm looking at. I'm answering some questions. I'm sharing some things I think are valuable. I think that's all I'm going to do. Someone's saying I'm having a hard time. I'm having trouble understanding why a lot of good traders I know are usually not using limit orders and they're waiting for the market order. Well, there's nothing wrong. I would say fundamentally, it's a style of trading in a way with trading with limit orders, but there's a little bit of an advantage. Like, it's not. This is what people confuse it with. They confuse it with like a silver bullet, but there's an advantage to seeing what happens here before taking the trade, right? So if I'm interested in this trade, you know, there's a trend line, take the local low, some other local lows, and a technical level and whatever. There's an advantage to seeing if price does anything but go straight down. And right there, you're basically saying, is the fee for trading this as a market order worth the cost of the knowledge that price didn't go straight down? Is that fee difference to see what happened here before I just click the button versus have a limit order sitting here? Is it worth it? And that's the edge. But people confuse it with, oh, price has bounced, so that's my trigger. I'm in the trade. That means the trade's gonna work or something. It's not really that. It's more like you got to see something happen here. You got to see that your line on the chart mattered a little bit. That price didn't just go straight through the level, in which case you're not in the trade. So it's just you have more data right now. Right now, this is a line on the chart, and maybe it's an alert on your computer or your phone. And when price gets down there, you know, you make the decision to take the trade. I think, you know, some of this stuff can be traded with limit orders as well. It's fine. But you also have other data, right? Like you have, is this a range now by the time price gets down there? Like, is price doing this? And maybe you say, okay, well, I'm interested in the long, but I'm at least going to wait for this downtrend to break out. Like, and you have a little bit of more information and data than had you just at a limit order. That's it. Basically, you just get a little bit more information to make a decision on, and you're just trying to decide if the cost of the market order is worth that information. And then the reason that like a limit order can or a market order can be nice in these situations is because the whole thesis of some of these trades is going to be something like grabbing the liquidity here and then running back up, and depending on how that happens, you might get front run on your limit orders depending on where you set them, and then oftentimes, not always, when these trades play out, price starts reversing really quickly, and you can't really chase it with the limit order. Like if you're waiting for something to happen, it's like, and you're trying to chase it, and price just moves without you, and you can't get filled, and so you kind of have to market into the reaction. There's nothing wrong, I would just say generally, for a lot of people to build their trading style and system around limit orders. A lot of people are working full time, high time frame levels, have busy lives, nothing wrong. What's my XRP trading plan? Trading it similar to Bitcoin, trading everything towards all-time highs. Willing to add compound. Basically have what is ultimately the same setup now on Bitcoin and XRP. Take these lows. I'll take a long. Kind of a different situation here. Kind of makes sense in a way, like we're trading at the 382 on Cardano. It's been way more bullish. But like, yeah, I would just say maybe some of the bearishness on Binance maybe resolving. This kind of looks like ranging PA now, not so much. You're kind of hoping for that if you want to trade the lows. Oh, there's something else I wanted to talk about a long time ago, but I got distracted. It was when I was sharing the idea of trading every level. One of the benefits of just being open to trading the way that I described, which is trading a bunch of different setups into your thesis, is not getting too fixated on one trade idea that is like either this or I'm not in any longs. And so, you can even use 0.5% risk, 0.25% risk, whatever it is, but the whole idea is, like, let's just say even right now, I'm interested in this long. It should be, and I got stopped on a long up here. It should be apparent that if this happens, and let's just say a little bit of time goes by, and we run into this trend line here, and it doesn't take the low, and that was the only setup I had planned down here, just creating a hypothetical, and this starts happening. I don't have like anything, like I don't have a breakout, I don't have whatever it is, and this starts happening. Well, does it make any sense to have been in a position where I said either this low or this low, name the setup, I am not long unless that setup comes, or to have developed some new plans, like, okay, we front run this low, is there anything else I'd be willing to take, structure trades, and you kind of want to put yourself in a position to be in the trade towards your primary thesis as reliably as possible and as safely as possible, but you're taking on risk, right? That's the whole idea of trading. You're trying to capitalize on a trading idea. So it's like, yeah, I would just say that there's a benefit to being willing to set up a bunch of different trades, not getting too fixated on whether or not you get this setup or that setup, this one works, that one doesn't. Just take reasonable trades, size them reasonably, and try to get The name of the videos, Gabby, are how to think like a professional trader, Mark Douglas, something like that. Seminar, Mark Douglas seminar, how to think like a professional trader. Somebody's asking, what time frame are you looking at for those market orders? Like, how much of a reaction are you looking for before executing? I mean, it depends a little bit on internal structure. Like I'll give the example here on, or the adjacent structure rather, on XRP, which is, you know, we come down and take these lows. Well, the low is kind of the relevant idea here in a sense. And I mean, it's so tight on that wick. It's like incredibly tight. Let's go. I got to get back to the 1 minute here. Like, dadgummit, I would say, let's go all, hold on. I would say not to get overly fixated on this, but like heck, I would say you can enter this trade here. I entered it a little higher. I entered it up here. But, and the point is this. The point is, like, I don't like the time frame analysis perspective on sweeps. Like, let X close, X candle, 4-hour candle, 1-hour candle, 15-minute candle, whatever, close above the level, because it's a little bit of a confirmation bias in the sense that, well, every sweep of a level that works, that you market ordered into, that worked, closed a 15-minute candle, a 4-hour candle, a 1-hour candle, a 2-hour candle. They closed every time frame, right? So if you're doing a back-tested analysis, you'll say, I'm looking at all these sweeps, and all the ones that work closed a 4-hour candle, or a 1-week candle, or a 1-month candle, or whatever it is. But that's just kind of defined by the fact that, yeah, it worked. Price went down through the level, came back up. The level was swept. It was never retested again. The low was never taken again. And just by default, that means the higher time frame you go, the more candles you're going to have closed. It doesn't actually, I don't think, oftentimes mean what people think it means. But that also means there's a 1-minute candle that closed above the level, right? On all the ones that worked, and a 5-minute candle, 10-minute candle, 15-minute candle. And so, but when we start building the idea of a time frame, so there's kind of an inverse correlation here, which is also this. For everyone that swept the level and didn't work, we're now going to find more and more cases of the 1-minute candle swept, but the 5-minute candle rejected. Okay, so then you could say, so wait for the 5-minute candle. But then you could say the next level is, the next level that didn't work was the 5-minute candle closed above X level, and then it didn't work. So now we have the 1-minute candles didn't work in these scenarios, the 5-minute candles didn't work in these scenarios, and the next is, but the 15s did. But now we're looking at the sample of, now here's only trades where the 15-minute closed, but then it didn't work. So let's look at the 30-minute. Okay, there's more trades that were, but this data doesn't mean anything, right? Because we're just stepping up to, okay, now the 1 day closed above, but the 4-hour closed above and it didn't work. So let's only take the trades where the 1 day closes. And you just build this further and further and further away. And you're kind of screwing up the setups asymmetry a little bit, technically increasing your win rate, right? Because we could just say, you know, we, what, I'm trying to think what a good example of this would be. Like, we could say, I always wait for price to go at least 150% above the last weekly close, because anytime it's done that, it's always gone at least another 100% higher eventually. But it's like, okay, like, is that a trade setup? So I would just say that, you know, for me, once the structure's reclaimed, it's reclaimed. The time frame doesn't matter. And you could say, isn't that going to get you into a lot of trades with stop losses? Yes, but I mean, it's also going to get me into a lot of trades I wouldn't get into otherwise. Like, we can just look at, I can just scroll through on the 5-minute chart. All of these sweeps happen pretty quick. There's a little bit of consolidation here. I mean, these wicks, these are 5-minute wicks. I don't have any of the adjacent levels pulled on. I just want to look at some of these lows start reversing. There's nothing wrong with this, by the way, just catching a higher low setup on a sweep. But some of these setups come and go in a matter of 3 minutes, right? And there's two ways to analyze it. Like, to analyze some of this is like, this is 5-minute candle, this is the next 5-minute candle. This is like 2-3%. It's not that there's no setups, but on this trade setup, you're basically shit out of luck if you're waiting for some kind of significant retracement, right? Like, the low comes, minor low, 382, and then we just start trending higher. Obviously, there's some really nasty versions of this back here. But the other way to analyze it is just to kind of say that, oh, anytime that price straight broke down, like here, we never closed a 15-minute above the level. Actually, in this case, we did. So you would say, okay, we closed a 15-minute above, but we still broke down. So I wouldn't have taken that trade. I'd wait. I go to the 30-minute chart. I think this is how a lot of people build their data and say, oh, a 30-minute never closed. So I could have avoided this loss if I just wait for the 30-minute close. And since the 30-minute didn't close, I wouldn't have taken that trade, and I could have even just gotten short. But, and they're probably maybe more thinking about it from a risk aversion standpoint in terms of not taking the trade, but then they want to take this trade setup, which was a major sweep, by the way. And now they're waiting for the 30-minute close, and they're entering up here. It's maybe okay. I hope you get what I'm saying. To me, if the level's reclaimed, it's reclaimed. If price is above it, price is above it. If it's above it for 5 minutes, it's above it for 5 minutes. If it's above it for 30 minutes, it's above it for 30 minutes. And it doesn't really matter. The time frame I don't think is that relevant. Yes, the longer price trades above or below a level, probably just by the way that price moves. If it takes a low and then spends 5 minutes above it, it might be more likely to hold if it spends 30 minutes above it. It's more likely to hold if it spends 4 hours above it, because it probably means it's moving away from the level, right? I don't think that time frame is a good way of analyzing when to enter the trade. Like, if I get this on the, and this is minute 1, minute 2, I'm just gonna probably take that trade. Stop under here. I've explained this too many times. I actually feel bad for people who've watched a bunch of my live streams. And the whole idea here is just, there's so many scenarios where you're just in this trade anyways. Price comes down, it takes this low, it does this, it spends 15 minutes here, so you enter up here instead. Like, this is triggering your entry in so many scenarios where it doesn't work. Not always, but in a lot of scenarios, it's going to be triggering your entry anyways. But all you've done is eliminate one of the winning scenarios, kind of arbitrarily. I think in most cases, but adjacent structure is kind of nice. Setting to maintain chart position when I'm not sure. I I I'm just gonna say no. Somebody's asking, is there any way to have a conversation with you about business, please? I'm just gonna say no. If I show you my DMs, I have like, I think literally hundreds of messages I haven't read about people reaching out to me for business. Um, I just don't really care. I've got enough going on. And 99% of them are like, 99% of them are just people saying that they are the business manager for X exchange and they want me to use their ref link. Probably not 99% of my DMs, but 99% of the people who are like really hounding me. They're like, I got a great business opportunity for you. We would love to have you trading here. I've talked to probably, or got messages from 20 of Bybit's head business development people. ABD said that. So the guy who said he wanted to talk to me about business said, yes, I was doing the same. I'm not going to lie. Laughy emoji. I know, bro. I know. It's okay. I'm not interested. Gasuni says, so no questions unless on paid group, question mark. There's no rule against that. I have no idea for a lot of these people if they're in my paid group or not. I'm just answering questions as I read them. I didn't see one from you, but maybe I missed it. Am I interested in ETH? Yeah. I'm interested in ETH. Kind of interesting. ETH's PA looks way shittier locally than Bitcoin's. This looks like we're coming down to these lows, but it's also a range. The only reason it looks shitty is because of this. Like if this keeps doing this, this doesn't look good. It can kind of get more rangy, but locally all these lower highs look a little worse than Bitcoin's. Because it probably looks a little worse because we have the lower lows on ETH and not the lower lows on locally on Bitcoin. The guy who said, so no questions unless paid group. I said, no, you can ask questions. He says, this is an ugly price action market. How am I going to make some money here? I don't know, ma'am. I'm going to try to make some money, but I might lose some. I would say that like if you generally are making money and you just feel like you don't really have any perspective here that you feel comfortable making money doing, or trading around, then just sit it down and wait for the market not to be so nasty. So I always work with the charts with from the same exchange or their advantages to compare them. There's reasons to compare them. Advantages, I don't know. It depends on what you're doing, right? I mean, depending on what you're doing, it could be a huge advantage if the charts are completely different and price is different. But generally, I'm just looking at the same charts. You know, it's funny. It's always funny with typing. You kind of can misinterpret like somebody's question or tone. At first, I'm thinking Gasuni is saying, "So no questions unless on paid group." Like maybe he asked me a question I missed, but I think he was just saying it like, "Hey, am I allowed to ask a question?" I say yes. He's like, "How am I gonna make some money?" And I'm like, "I don't know." And then he's like, "Yeah, I'm just sitting on my hands watching this craziness." Like it's. I think it was a little bit more wholesome than I interpreted it. Yeah, man, sitting on your hands, nothing wrong with that. I'm interested in poking at everything here, but I don't know. We'll see. Um, the simple answer, Kinderjoy, he says, how do you weigh on what trades to risk more and less? Well, the simple answer is that the trades that have a higher win rate, for example, you could justify risking more. And the trades that have a lower win rate, you could justify risking less. The trades that have maybe an equal win rate as some other kinds of setup, but have a much bigger asymmetric element to them, you might end up risking a little bit more, but it's just in your data that you'd make that decision. But I think for most people, while you're building your data, I wouldn't worry your own personal trading data. I wouldn't really worry about like thinking about sizing trades differently. I think that's more of an advanced thing that you just are gonna think about. I think generally just keep your sizing static is probably the best advice for most people when they're building their data. Because if you're kind of changing the way you size your trades arbitrarily, it really fucks with your trading data, because if you're not actually tracking exactly what it's like, oh, I just have a feeling this one's going to work, or I really need to make back my losses, and you take a big loss, it's like everything's getting kind of difficult to track and analyze and understand. Whereas if you're trading static size, static risk, kind of defining your trade as much as possible, then it's a little easier to do that. But I would just say generally, like there's some principles around risk management that should be adhered to, that should be understood, that should be implemented, but there's some flexibility in all of it. But generally speaking, like if we're talking about like how much money should you risk as a new trader, it's like nothing, right? It's as close to zero as possible, like I talked about earlier, so you can get some experience, right? Make some mistakes and make them cheap. Can I explain why I'm using Binance instead of Bybit? I think I just tabbed down to it for something and then I just stayed on it. There's no reason. I think I was looking, or I just moved away from it for a fresh chart for something, and then I just stayed on it. I mean, generally they're going to be the same, or pretty close. Christina says, sorry, Lucky, nothing like that. Your trading is impact alone, very cool. Lives. I mean, just in the dumpster, that's all. I understand, bro. wild price action for sure. I mean, I'm a little bit, what's the word here? Oh, tired of being on this live stream. I thought I would kind of hang out here for a little bit and kind of explain what I'm looking for, answer some questions. I think I've done that. Let's see here. Yeah. Oof. I just have a hard time caring about any of this kind of trending breakout stuff. Maybe all this breaks. I'm gonna just kind of go with like a really bullish, like kind of nothing at play here. I mean, something like this starts happening, you just kind of try to catch it early, but here it's a breakout of a range. GP, just put on a little bit of risk. I think this would be, let me get rid of all these brush marks. Yeah, I mean, whether we take this low or not, that'd be kind of nice. Just riding up to these highs. Speed it up a little bit. It's kind of interesting, like if sometimes I do analysis like this where I kind of just say like, what is the headline? What is the headline chart price action here? And it is a breakout of this, right? This is just major downtrend breaking. This headline is coming at some point. You think, right? Like you can just see prices at some point. We're going to be playing with this trend line, and people are going to be posting about it on Twitter. Bullish breakout. If this holds, we run into all these highs, the 100K highs. Run straight into horizontal resistance. Bullish case would just be to come wipe out just the local breakout and then continue on. So people just absolutely lever to the tits here, breakout, or just come back for the lows. Is straight up possible there? Yeah. I'm just kind of thinking about like, it's crazy because like so many people are going to want to long this breakout. Like if you're really bullish on Bitcoin and you think, and I am, but most people will be and are at this point, you're kind of taking, like, how do you get everybody just long into these highs? Probably this, if the trending breakout is also bullish. This might be fadeable as a short, but I'm probably going to have more short picks on alts and just short some alts here on Bitcoin. Maybe retest the trend line or retest wherever the low comes in here. Trap them all, liquidate them all. They're trading uptrend. Frankly though, I'm probably round tripping a sizable portion of this long in these scenarios, but probably hedge short, but either here or with alts. And then this becomes a really beautiful setup, potentially. And this is kind of, you know what? It's so funny. I just want to look. Give me a second. I just gotta look at this for a second. Is this just the Trump PA on this breakout? I mean the Trump coin PA. I swear this is almost identical, even from here. It's close, I think, but let's just look at it really quick. I don't actually think it's as close as I thought. Just some similarities. I was thinking that for some reason this retraced the 382, this trending touch. I don't think it's anything like it. It's just an impulse. Gets more like it if we bounce here range and then run all these lows. I'm abandoning this mission. Nothing like the Trump PA. All right. Hey, this is amazing. This is like classic Livestream PA. It's not that uncommon. Borderline trying to be locally trending PA. Looks more rangy. All right, well, this is where I'm at. That's the setup. There's probably some other setups higher with retracements, but I think based on what's happening here, probably just taking that. Not taking it if it just nukes. Just wait for the lows to get taken. I get a lot of things too wrong, though. Nonya says, honestly, magic how spot on your analysis turns out to be. That intuition you must have built up over at least a decade watching the charts. Yeah, I would say I get a lot of things wrong that ideas just don't play out at all. It doesn't play out anything like I thought it was going to play out. I think generally speaking, I'm pretty good at adapting my analysis or perspective. Like this is where there's kind of two paths you can go. So for one, I think I get a lot right. For everything I get wrong, I get a lot right, and I mean I think I get in as realistic while also being maybe somewhat impressive, as much as you could expect to get right, or enough to demonstrate like there's some understanding of the market that isn't just happenstance. Because you could have thousands of people predicting thousands of things. Of course, some things are going to happen, some things aren't. I get enough right enough of the time to, I guess, impress some people. But when I get things wrong, and I think this is where a lot of traders go wrong, is they just actually just hold on to the same idea no matter what happens. So they don't adapt to, like they'll just say, I think, whatever, 60K is coming. And then it doesn't matter, price could be at 75K, it could go to 100K, it could go 115K, it could go 130K. It doesn't matter where it goes. They'll say 60K, trust me, is still coming. A little bit of an unexpected move, but definitely still heading towards 60K. And they just kind of turn into zombies. It's like they can't just say, and I think that's where a lot of traders go wrong, with not just their analysis but with their trading. Like they have one idea and it's like they're so fixated on that idea they just can't see any other opportunity or setup that's worth putting on any risk, and their setup doesn't come, and then they're just waiting for it, and they can't change their perspective. So I'll just say I do a good job of changing my perspective too, when in time to get realigned with what's actually going on versus what my expectations might have been to some degree. And again, not always there either, but is there any hate to hack? Is there any hate to say hack to identify a low time frame impulse versus an uptrend? I don't understand that sentence actually. Don't go lucky. Teach us the immortality of the crab. Now that looks like a range retest. Yeah. basically, I think the way I'm approaching my higher time frame thesis and marrying it towards my lower time frame trade setups is like, I think I'm in a position for every dollar I risk on every trade I take, whether it's locally into this impulse and retracements or higher time frame is higher. I basically get to risk $1 to make like $25 to $30 on every trade I take. That's the way I look at things right now until something changes. And I can probably break the chart up into segments that put me into trades essentially no matter what happens. And if I'm completely wrong, I'm gonna lose 6 to 7%. Price trades back down towards 60K or something like that. And I'm gonna round trip some winners that I didn't take profits on because we bounced, but all-time highs never came. That's how I kind of basically am looking at the market right now. I think every trade for me on XRP, Doge, Bitcoin, ADA is going towards, is targeting all-time highs, and I can take some short setups, but yeah, I think I'm getting something like 25 to 30 to 1 on my risk reward on every trade I take until new data, information, structure presents itself. I think all of these trades are 25 to 1 risk reward. Everything in here is 25 to 1 at least. Probably more. Maybe more. I think that applies to all of this. That's why I'm trading everything. I will never say. Kirk says, just got here. Did I miss the big long / short? You missed the whole live stream. I think I'm going to end it. Trump to speak something in an hour based on what he stated. He said he's going to make investors happy. Let's just say it's just nothing to fade. If, like, whether you like Trump, hate Trump, whatever it is. I mean, personally, I think he's going to do some good things, bad things. He might do really bad things. He might do really good things. I think he's probably pre-positioned on some of this stuff and is going to use the taxpayers to pump his own positions, and is planning on trying to attempt to put tax-free gains on crypto. Don't have to be reported. Probably have some of his friends positioned on these as well. He's probably made backdoor deals on them. Like, hey, I'm going to tell you exactly what we're going to be doing. You basically buy all this shit. I'm going to pump it with taxpayer dollars, and in return, you're going to give me this, 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 and this. And they say, okay, deal. That's what I think is probably going on here. Is that immoral? If that's true, yeah, it's probably not great, but I wouldn't mind making some money from it. Do I think he's trying to trick everyone? Like, let's just assume everything's genuine, right? Like, he's planning on pumping it, whether it's because he just believes that he wants America to be #1 on crypto representation for any country, or he wants to pump his own bags or whatever. Let's just assume his intentions are genuine and he's willing to actually try to do it and build some sort of meaningful crypto reserve. Okay, what's the bearish narrative there? Like, they're not going to buy enough, so it's not really going to matter. They're going to announce like some pittance of an allocation to whatever. We probably need some kind of details there. People aren't going to, beyond that, like a big part of it is people are going to be speculating like crazy. People are going to be positioning themselves like crazy, so it's going to add to the buying pressure. Who's stepping in front of that train? I mean, why? Like, who's stepping in to say, I'm, I'm gonna just sell. I'm not letting ADA go up, bitch. I'm bringing us back down to zero. Probably no one. I mean, is there going to be volatility? Are people? Is price going to go up, go down, liquidate people? Probably, but generally, I think probably up. Yes, I talk about all the time. Nunya says, how many trades do you like to take at once? If it's 1% per trade, but you're long every level across 5 different coins, doesn't that add up to like 30%? Yeah, I divide my risk, Bitcoin, altcoins, between the altcoins I'm trading because of the correlation in the market. Sometimes you end up with a completely different outcome in terms of like Bitcoin went up 20% off a long and Doge went up 500%. You ended up with 5 Doge longs and one, like something that needs to be just taken into account a little bit is like if you take like on XRP or on Doge, if you take like 4 or 5 70, 80, 100 R trades, and then you sell the top of some meaningful top, and then you're looking to buy back on retracements. It's all coexisting trade thesis there. So for me, it's like getting repositioned on something I've done really well on. It's, yeah, I want to get back in. I'm going to manage my risk. I'm doing all this thing. It's kind of like, but I'm not like, oh my God, what if I lose 4 trades on Doge? It's like, I don't give a fuck. I printed from 9 cents up to 42 cents and on XRP, and I took a ton of ads on those positions, and price went up 3 or 4 or 500%, and I sold, and now I'm just trying to get repositioned for another leg up. Rinse and repeat. If none of them work, it's all right with me. Can you please share your opinion on options trading? Not really. Someone asking, how do you handle your taxes? With an iron fist. I would just say talk to tax consultants. I mean, everybody lives in different countries, different tax jurisdictions. That's a completely different setup. Hey, if you live in the US, maybe no more taxes soon. I like all types of music. Someone saying BTC running away. It's certainly going up. Probably these highs come into play next, and the scenarios, we just start grinding higher. All right, folks. I probably gotta end the live stream. I just want to say, everybody here should just think of some trade setups that look interesting to them, plan them, take them with risk management as a start, right? Like what, like for example, at some point, something's gonna happen. Let's just say all you want is longs. All you want is longs on Bitcoin. All right. Right now it's a range. Okay, so what the biggest thing you are worried about? You have two concerns. One is you want to take a winning long. Two is you don't want to take a losing long. Three is you want to take probably a big winning long. I wouldn't concern yourself too much about that. I concern myself about the structure of price. Is this range breaking out? Is it holding? Is it rejecting? These lows are interesting. This starts looking like a horizontal range. Little breakout here. Is there any way to structure a trade if this keeps trending on a horizontal breakout? Well, yeah, I'll probably look something like that. Little box trade. Range, breakout, reclaim. You trade the box. You risk 1%. You put your stop loss under the lows. But if you get stopped out, well, now you're trading this whole section of price twice. So on and so forth. Probably size this for 0.2 risk, 0.3 as well if you want. But right now price is just ranging internally. Price could come back down into these lows, then it's just like a mini range within a range. Wipe out some of this internal trending structure. Come back up to the highs, run back down to the lows. Range within a range. I'm literally not saying that a long here would not work. So I'm going to say this next thing, prefacing it with that. But I think what ends up happening is what people want to hear is me to say, like, I'm looking for this long setup, and then this starts happening, and then they kind of want me to be like, oh, it's not coming. Like I'm long here. I'm long here, but it's like I'm not interested in doing that. I guess, like the guy that earlier was like, just give a long setup already, or give a trade setup. Stop talking. It's like, okay, well, we're in sharp range. This looks interesting down here. Could you trade this range? Like, could you be like, oh, we're forming a little uptrend. I'm going to target these highs, and that's like 8%, 1% away. It's probably 0.8, yeah, 0.8%. 0.9%. Yeah, you could probably set something up in here, but yeah. I think this looks interesting. If we break out of here, then other stuff probably starts looking interesting, but all right, guys, I think I'm gonna end here. Thanks for everything. Yeah, if I end it here, price will move somewhere. Yeah, sorry, Kaboom, you missed the whole thing. All right, guys. I think probably, I'll be honest though, I probably think these highs probably are coming, honestly, before these lows, but it's just kind of a guess. Doesn't really matter. That does not mean I'm longing this. I don't think they're coming enough to like set up a trade here. I just don't really think, like, this is a 1 hour trade, pay some fees, see what happens at the range highs, maybe get a breakout. It's tough to say that that would make any sense. They're getting retested there so often anyways. This, on the other hand, better chance of going somewhere. I didn't even see your question, bro. Or KGB said, thanks for ignoring my question. Scrolling up, he said, do you use things like algo orders, chase limits, etc.? Don't mind me. I use things, I use stuff. Mostly just click buttons, market order, occasionally set limit orders. Nothing fancy. What do you think, guys? Just me saying I was going to end the live stream, price starts coming to the level of interest. It knows. Oh, it's almost over. We can get there. I'm just gonna end it. Too risky. We could be sitting here for another 3 hours. All right, guys.